Hi, everyone. My name is Will, aka Dr. Financial Literacy. Thank you very much for stopping in today. Today, we're going to continue to just look at the HELOC that I have, the debt tool that I'm using in preparation of really starting in May. Some of the processes that I'm going through now and using a HELOC to reduce my debt can be the same process that you use to bring down your debt with a credit card, and I'll be more than happy to work with you, whether you have a HELOC, you'd like to get HELOC, or reduce your debt through credit. My contact information is in the description box, so please give me a call or shoot me an email and let's get started. Now, so today, still working with the term VAB, or Velocity Accelerated Banking. VAB to me is a concept that I've developed as a result of working with practices and principles and ideas from the Velocity Banking Camp and the Accelerated Banking Camp, making or putting the two together and seeing how they work. And I've run a number of real world usage out of them in terms of using my own debt in general. So now I'm looking at continuing to develop my concept of VAB using real world debt of $50,500 as a HELOC that I was able to attain after praying for it, after applying for it, not receiving it in the beginning, and finally getting it. Now this HELOC definitely comes with a number of pros and cons. So I'm looking at those as I continue to read the 150 pages of the diagram. So let's go ahead and get started. All right, so as typical, as I pointed out before, my income is $3,390. So if you're looking at how you can start with a HELOC, if you are starting with some credit card debt, one of the first things you need to do is look at your income. This is my net income after taxes. My expenses. My expenses right now still total $3,000, even with going into the HELOC. I'm looking at the average in general and trying to work from there. These expenses include my rent, paying it with a credit card, my mortgages, if I have it, paying it with a credit card, gas, water, light, utilities, my monthly bills, the bills that are on the credit profile of me, and the daily bills of just grabbing something to eat are all put into this 3,000. Now this, I need to say that this is a projection, again, starting in May. May will be the first month that they really start calculating the 50,000 debt that has been provided to me, the $50,000 loan or revolving line of credit in general. So with that, cash flow of 3,390 after taxes for the year, expenses totaling about $3,000 average. I have the total, but it fluctuates back and forth, so I'm just going to use 3,000. A cash flow of $390. So after all my bills, after all my expenses, $390 remains. How awesome. That's a blessing. That is a blessing. Many people don't have as much cash flow as I have. So I'm definitely blessed to have that amount. But I started off with maybe I think a negative 2,500 in cash flow. So I started attacking the credit card debt, other debt. So I'm on a positive. I'm thankful and to be blessed. So now moving to the second box. So starting with the $50,500 line of credit, I put in my income of 3,390. So now I'm treating this HELOC like a checking account, a savings account, an emergency fund account. Everything is here. If I need to get money out of it, all I need to do is use a debit card. I mean, all I have to do is write a check to get some money that I can put to the side and be ready for emergencies. But as of now, with this particular HELOC, is a HELOC that works on writing checks that I can cash and pull money off of it. I'm looking for another HELOC in general that can have a Visa card, MasterCard, debit card, a checking account all in one account, and that's later. For right now, I'm rolling with what I have. Remember, it is what it is, but it's what I will make of it. And I'm gonna make of it the best that I can right now that I have it. And I've been able to achieve that. So after putting in 3,390 of my full income, every penny, once it leaves my employer, goes to a bank. Then I take it from the bank, and then I'm having to put it inside of a HELOC. It'll sit there. That will leave me now with a balance of 47,110. Now, the monthly payment on that HELOC, if I just pay interest only for 3 years, will be $424. That's the first payment, but it's going to go down as the balance goes down. But my first payment in June will be $424. Next, that gives me the balance, as I said, of 47,110. Now I have expenses. So with velocity banking, accelerated banking, you put back your expenses back onto whatever debt tool that you're using. And in this case, my expenses came up to 3,000. But because 424 is already in there and is being made, remember from previous videos, when you put cash in or make any type of income deposit, it actually acts as the payment. So I'm able to take the 424 that's built into here, minus it, and have it here because the payment is already being made by my salary going in. That's the beauty of whatever accelerated banking or velocity banking or VAB. The beauty of whatever credit card, HELOC, or whatever tool you have, personal line of credit, when you put your income in or expenses that are greater than the card payment, you're satisfying that payment and freeing up cash flow. So now with the expenses here, with expenses, okay. Now there's interest that has to be paid. And remember, this is an interest only loan. So for the first 3 years, all I have to do is pay interest. Okay, so all I have to do is pay interest on the first 3 years. But I may not pay interest only, I may pay extra. But I'm adding the 424 interest back in. Although it's been satisfied, they still will have to have interest calculated. That's going to bring it down to $50,100. So by June, my HELOC will go from 50,500 to 50,100 as a result of me simply not using a checking account and letting my money just sit there. I previously had a savings account with a couple of $1,000s in it, and the banks were paying maybe 10% in general. But this is just one strategy to reduce debt. So all of my resources I moved onto the credit card to pay down my debt earlier. And now I'm gonna do the same thing on a larger scale through this HELOC. Now this HELOC is maxed out. It is at a 100%. Now I'm gonna take a hit on my credit. This is a strategy I'm learning as I go along. I'm gonna see how bad the hit is on the credit profile. I hate calling it my credit. The credit profile of me that they have is going to take a hit. But that's something I'm willing to take at this particular time as I learn more. In general, I'm unable to read everything about the best strategies, but this is just a strategy that I'm currently using. And also, the company that I went with had a minimum draw of the HELOC that they were providing you of 50,000. So right out the gate, pretty much that's what it is. It is what it is, and I went for it. Okay, now in looking at the third box, this is everything with me using the VAB strategy to bring down my debt. So I went from 50,500 to 50,100. That should be my first month of balance as a result of doing everything. Now, this is an ideal world, so some things may come up. Maybe as much do not go onto the card in general, but I'm putting everything onto the card. Now, this is the third way. Now, the third way is that I can take this HELOC. I can make the basic interest only payment, and the balance in June will still be 50,500 because I'm only paying interest only. I'm not paying anything at all toward the principal. Here, I threw everything in the kitchen sink at the principal or the balance, starting balance of 50,500. Or I can pay a little bit more the first time out and reduce the principal just simply by doing it without doing any of this at all. All this can go away. So if I pay $425, that'll be the interest only payment that I'm required to pay for the next 3 years or 36 months, and a principal. And in this amount, I'm paying $1 toward the principal. Then that means my balance in June should be $50,499. Because again, I'm paying more than the interest only, because all they're asking me to pay is just the interest only. Hey, we're just saying just pay the interest only. We're giving you $50,000 to pay down your debt. All we're saying, just pay us the interest only on the money that is left every month. And for the first month, if I just pay an extra toward the principal, my balance will be $50,499. So I'm using VAB to bring down the balance quicker. And you can do this also with a credit card. Check out some of the other videos. I think I ran through credit card example. So just wanted to stop in again. My name is Will, aka Dr. Financial Literacy, and I'm here to try to help you understand velocity banking, accelerated banking, and VAB from my perspective in the real world, using real world money, real world bills, and real world experiences. If you'd like to be a client, or if you'd like more information, just give me a call or simply shoot me an email. Thank you very much, everyone. Have a great day. Look forward to seeing you again.